What's going on, y'all? Welcome back to the Mining Pod. For today's show, we have Sean McDonough, the president and founder of New West Data, an oil and gas miner in Alberta, Canada, that also owns the oil and gas wells that they mine on. So they've got a really interesting business model where they can sell the oil, and they do sell the oil to market. They also mine Bitcoin on top of that to have dual revenue streams. So in this conversation, we talk about that strategy, what led Sean to adopt it and actually decide to completely vertically integrate versus just co-host on an oil and gas site or JV with an oil and gas company. We also talk about some of the barriers for some of these bigger oil and gas companies with regards to getting into Bitcoin mining, why some of that adoption has been slow and what needs to change for it to pick up. And we close with talking about the convergence of oil and gas and AI data centers, whether or not this is something that's really possible or is currently happening. So buckle in, y'all. Really fun conversation. Really enjoyed this one with Sean. He brings a lot of great insights, so hope y'all enjoy it too. Today's show is brought to you by Fractal Bitcoin, but we'll learn more about them later in the show. For now, let's get right into it.
I want to take a second and talk about Colorado Air Filter, a new sponsor for the Mining Pod and a major supplier of air filtration systems for Bitcoin mining sites. Colorado Air Filter is currently running a summer sale on their inventory. From Mervate pleats to HEPA filters, shipments to installations, containers to retrofitted buildings, Colorado Air Filter has it all. Here's what one recent major miner had to say about working with Colorado Air Filter. Working with Keith and Colorado Air Filter has been a seamless experience from day one. Their filter media consistently meets the demands of our Bitcoin mining facilities, ensuring reliable airflow and equipment protection. Keith is responsive, knowledgeable, and understands the unique operational pressures in our industry. We value both the quality of the product and the outstanding service they provide. Units are ready to sell. Contact sales at coloradoairfilter.com using code MININGPOD to claim 15% off today. Again, that's sales at coloradoairfilter.com with code MININGPOD.
Mr. McDonough, welcome to the Mining Pod, man. How you doing?
Very good, Colin. Thank you for having me.
Yeah, man, absolutely. Super happy to have you on. Looking forward to this one. We had a lot of really fun conversations in Vegas, maybe over a few bourbons. It got a little, not too rowdy, but it's always fun to go to some of those happy hours and you make new connections. Was really,
Absolutely.
Really happy to have, connected with you in person, and thought it'd be great to have you on after the conference, because New West is doing some pretty interesting things on the oil and gas side of Bitcoin mining. So to get this kicked off, for those who might not know about New West or you, can you give a quick background for yourself and also the company, how you got started with all of this?
Yeah, absolutely. So my background's in oil and gas here in Calgary, Alberta. So probably good for our conversation too, for your American listeners. Like Alberta's, think of it as like Canada's Texas, center of oil and gas production in Alberta, and Calgary's sort of the financial center there. So I worked in oil and gas, worked for a private oil and gas company, about 5,000 barrel a day company, up until founding New West. And at that company, I led a new venture division where essentially I was looking at developing projects that were outside of the traditional scope of oil and gas, but which were complementary, obviously, to that oil and gas production. So I've been mining Bitcoin since 2019. First, as part of that new venture division, and then we founded New West Data, my co-founders and I, in 2020. We were initially scaling as an off-grid, essentially flare gas miner in 2021 and the early part of 22, and then the latter half of 22, we realized there was an opportunity here to take advantage of the many kind of cumulative decades of experience my co-founders and I had as oil and gas executives, to vertically integrate and deploy a strategy where we would acquire oil wells directly and monetize the associated natural gas through Bitcoin mining. So we're both a Bitcoin miner and an oil and gas producer. So we own oil wells, and we consume our own natural gas through our associated natural gas through Bitcoin mining.
So what are some of the pros and cons of actually buying the site outright? Because when I'm thinking about it in my head, I think, well, your CapEx on the front end of that is just much larger than if you're buying some containers and generators, or maybe leasing the generators if they're already on site, versus just plopping your rigs down at an oil and gas site and just launching some sort of JV. Why did y'all decide to go that route?
There's a few reasons and a few benefits, I think, and really significant benefits that full vertical integration as with oil production and owning the oil production can unlock. I think the first is that you have full cost certainty and full control of the energy resource, right? Like the natural gas is your own. I think probably good to frame it in terms of like all flare gas mining or vast majority of off-grid mining in natural gas is essentially providing a solution to oil operators, providing an offtake solution for the natural gas, basically helping oil companies get rid of natural gas that's excess, that you're flaring to excess, you're creating an issue so that they can continue to produce their oil. What we do is essentially find oil wells that have a problem. They have too much gas that they can't get rid of through the pipeline and effectively are, flaring too much. And we solve that problem. So we're both the oil and gas company and the Bitcoin miner providing the solution. In essence, yeah, you're more capital intensive because you're purchasing the oil well, but you also enjoy the revenues from the oil side of things, as well as that cost certainty on the Bitcoin mining side. When you're vertically integrated like this, as we are too, you're also you've got two different revenue streams. That's obviously there too. So you're seeing diversified and uncorrelated revenue corporately, which is a nice thing. Like our cash flows are pretty evenly split between Bitcoin mining and WTI oil, and those are uncorrelated commodities, and that's a nice characteristic to have. In answer to your question around sort of why not just co-locate, I think it's that. I think we have the understanding, the ability to execute on the oil side of things, and I think it makes sense. And also obviously a long history of executing on the off-grid, power gen to Bitcoin side. It made sense for us to do the full package. Sort of the final point is you can drive value in your acquisition if you can think about your natural gas differently as we can. So yeah, that's the background. You have to have both sides of the equation. Like operating an oil well, definitely in an oil field, is its own sophisticated operation and can't be sort of underestimated there. But we're fortunate to have that background and be in a cool space here where we're able to be scaling pretty quickly here.
To flip the question on its head, to ask it from the other side, why wouldn't more Bitcoin miners want to own the drill site? Or is this happening more than we realize just because they're quiet about it? What would be some of the things keeping them from taking that full step towards complete vertical integration?
I mean, you really have to understand how to run an oil site, which you have to understand reserves evaluation and oil and gas, like oil well operations. You have to be regulated as an oil company, which is an important thing to understand. So yeah, it's not a light undertaking if you don't have a strong background in oil and gas for a Bitcoin miner to sort of pursue this business model. I would say that's the main reason. You need to have it's a completely different discipline. So you need to have sort of both disciplines there, and maybe anticipating your next question, why not more oil and gas operators, right? Beginning to mine Bitcoin. And it's kind of the same answer. Like you have to understand Bitcoin mining, understand everything from, buying the right equipment to operating the site. I'd argue it's maybe less of a step in some ways for oil and gas companies to educate themselves that way. But then you're left with sort of a capital allocation question where if you're a traditional oil company, are you going to go and spend the bulk of your capital on natural gas generation and data centers and computers in lieu of drilling oil wells? I think that's quite a departure for your shareholders. So I think we're in a really interesting position, and certainly as oil operators in particular, not just natural gas operators, but oil operators kind of have a unique business model and I think unique background with our team.
Miners, are you ready to earn more with what you already have? That's what Fractal Bitcoin is for, scaling Bitcoin with Bitcoin using a fully compatible recursive design. In just 7 months, Fractal's hit 18 million users and nearly 2 billion transactions. Fractal's cadence mining reduces up to 50% of your pool fee. No new hardware, no extra energy, and it's easy. FB rewards go straight to your existing Bitcoin wallet address. Over 90% of Bitcoin's hash power is already merge mining Fractal. Get more from the same resources. Start on Fractal today.
Going back to the, an oil and gas operator doesn't want to go spend the CapEx on, a bunch of data centers and Bitcoin miners. Is that why we typically see JVs more in this area? Is because, they kind of offload the risk onto a partner and then just take a split of it. It's just easier for everyone.
Yeah, exactly. Like in the traditional case where you'd see an oil company partnering with a Bitcoin miner for a natural gas offtake solution, they need a solution to their gas, and yeah, exactly, it's capital intensive. So it's like, are they going to go and capitalize that themselves and educate themselves on a different industry? I think that's been a step too far traditionally for oil companies. So yeah, I'd say that's it: capital and maybe risk, maybe just operational know-how as well.
That makes sense. I want to go back to something that you mentioned earlier, and maybe I misunderstood, but you were talking about sometimes the gas that it already has a pipeline in place for some of these operators. They can't bring it to market, or it's not worth bringing it to market. Is that simply just, the economics of natural gas prices at that time? Like, is there a certain consideration to where when you're drilling or when you're pumping gas up, sometimes it just doesn't fetch the right price, and so they don't even bother transporting it? What transportation costs are involved in that? Like, why would the economics not make sense there?
It's transportation costs, but it's also your capital. It's often a capital consideration. So it's how far do you have to build your pipeline to get your natural gas to the nearest gas plant, or is the nearest gas plant so far away that you need to build a whole new gas plant, which is a very capital intensive undertaking. So there's a lot of locations where you've got the geology and the potential for the production from a new drill, from a new oil well, but inadequate infrastructure, an inadequate natural gas infrastructure in place to process your natural gas, and then that creates a scenario where your gas is the term is egress. Your gas doesn't have any egress, and so you're left with flaring. And then Bitcoin mining is a super elegant solution to that. I think a great example of, which I know, we say all the time, that sort of Bitcoin as energy and as a really unique way to digitize energy.
So is there I assume the answer to this question is yes, but like there's a specific price on natural gas to where, I think we actually talked about this when we were at the Giga happy hour in Las Vegas. Like, if natural gas were to hit a certain price per million BTU, then you would just probably sell all of that, right, and not use any of it to mine. Like, is there a situation where you just completely shut off your mines and you're just selling straight to market?
Yeah. So theoretically, there's a price for natural gas where it would make sense to spend any amount of CapEx on a pipeline to get your gas to somewhere where you can sell the natural gas. But it's that capital component. It's the infrastructural constraint of needing to build a pipeline, needing to build a natural gas infrastructure. So,
but assuming the infrastructure is already in place, because did I misunderstand? New West has the oil pipelines in place, but not necessarily natural gas pipelines. Am I correct with that?
Yeah, the oil is produced to tanks. In our case, which is fairly common occurrence. So the oil is kept on site until the trucks come to NYDIG. It's the gas that is either flared or in our case consumed by Bitcoin mining, because there isn't the infrastructure in pipelines to get rid of the gas. But the oil stays on site until it's trucked.
Okay, understood. So there would really probably have to be a just absurd bull market in natural gas for y'all to consider building out that infrastructure. But then I feel like there's a consideration to where you might get ahead of yourself, or maybe be too late even. You could see the price of natural gas spike, and then you start building out this infrastructure, and then it just tanks. So how do you manage, like, if you were to design or were to spend the CapEx on a pipeline for natural gas, how would you manage those considerations? Or is it kind of just easier to just wait to see, like, if the money comes in, something like that?
It's very site by site specific, I would say. Yeah. In general, in terms of the way we consume sites where there's like, because we're specifically targeting sites where there's not egress, right? So we essentially, and where there would be, flaring volumes or no option but to flare. And so we basically go and rather than spend on traditional natural gas infrastructure spending, which would be pipelines and gas plants, we spend on natural gas generators and consume that natural gas ourselves through Bitcoin mining. So it's kind of it's almost like a completely different capital program. I mean, really, thinking of us as an oil and gas company, what we are and why we're so different as an oil and gas company is we have a completely different natural gas midstream mandate, I guess, and capital spending mandate from that standpoint.
I want to zoom in on some of the regulatory stuff and with regards to like working in Alberta. How difficult is it to get a drilling permit? How difficult is it to actually go through the process of acquiring one of these sites? Now, Alberta is a little more business friendly than a lot of other territories in Canada, but I know that there, at least from where I'm standing, it seems that there's more red tape even on the federal level with Canada than with the US. So how difficult is it in the current political environment to, maybe let's start with the first one. Let's say you're prospecting for a site to drill. I know you guys buy already active sites, but assuming that, you were doing the opposite and looking for a place to drill, like what would the permitting process look like for that?
It's a pretty straightforward permitting process if you're as long as you're an oil and gas company. So it's like, you have to have a license to be an oil and gas company, and that's a very regulated process. So that's sort of the main hurdle, I guess, is who the regulator and the government kind of lets operate. Once you are an operator, I wouldn't say, particularly in Alberta, I wouldn't say there's a bunch of restrictions around where you can develop new opportunities. Alberta is a business friendly province, and I'm sure we'll get to it. But Premier Smith, who fortunate to get to spend some time with here in Alberta, is supportive of the oil and gas industry in Alberta, and also very supportive of the Bitcoin mining industry in Alberta, particularly in conjunction with oil and gas development. I think she's, her cabinet have really been wonderful to work with, and really recognize the benefit that Bitcoin mining can bring from extracting kind of maximum value from Alberta's resources, and also mitigating flare volumes and essentially just maximizing the value in the province of Alberta for sure.
Are those conversations just now starting to happen and with politicians, and maybe even outside of the political realm within private companies like other oil and gas companies who maybe didn't know anything about Bitcoin mining or how it can be leveraged to solve some of their problems? Are we early in those conversations? Are we kind of in the middle of them? How long have they been going on? And would you say that in general, people outside of the Bitcoin industry and the mining industry are really kind of waking up to the potential with this?
Yeah, it's interesting. I would say the conversation has been going on for a long time. I mean, US has been mining Bitcoin in Alberta since 2020, for example, and there's certainly been small scale Bitcoin mining in Alberta probably since about 2017. I would suggest, or I would say, it's still a pretty small piece of the consumption of Alberta natural gas. Frankly, like Alberta's a major global center for oil and gas production, and there's like an enormous amount of resource here to be to be accessed that doesn't necessarily make sense through traditional means in terms of at least monetizing natural gas. So yeah, I would say yes. The short answer to your question, not early for sure, but it happens. Like off-grid oil and gas partnerships with Bitcoin miners, where Bitcoin miners are consuming natural gas through generators and electrifying Bitcoin mining. I mean, that's definitely happening throughout the province, and there's a lot of regulatory and policymaking tailwinds behind that. But that being said, yeah, it's relatively small. I would say the large oil and gas operators understand it, but it sort of comes down a little bit to a strategy and capital allocation standpoint, where it's a big departure. in terms of where you're spending your facility money to build Bitcoin mines, especially if that takes away from your development, capital for drilling new wells.
So it's a big CapEx thing for them, and you've mentioned that earlier in the conversation. How much of it is also a red tape or just kind of operational complexity issue, I guess, as well? I mean, I've heard from a number of oil and gas miners, and I'll ask them the question all the time. It's like, are the big guys doing it? They're just doing it behind the scenes. They don't want anyone to know about it. And sometimes what I'll get as an answer back is, some of them are starting to explore it, but for a lot of them, they just don't want the headache of another thing to think about. These sites some of them are massive and they're very dangerous and have a lot of moving parts. So the idea of adding another layer of complexity on something that is already super complex and a huge feat of engineering is just not appealing to them. How much of it is that a consideration as well?
I think that's it's very well said. And it's a big part of it. It's like, yeah, you're going to go and if you're a large company, you're going to completely shift the way you're thinking about, your natural gas and your existing natural gas, potentially your existing natural gas solutions, or even, exactly, if you're mitigating your flare volumes, you're putting in a whole other facility. Yeah, it's just it's something that it takes a commitment, and it takes it as a mandate. Like it's, I think as obviously you'd appreciate, and us as guys with lots of experience in Bitcoin mining appreciate, Bitcoin mining is its own industry. Oil and gas is its own industry, and you need to have an appreciation for both. So yeah, I think that's it. I mean, I think from a red tape perspective, there's regulatory things to hit. Like you have to meet regulations in order, especially if you're building the larger site you build, which is, that's fair enough. But I wouldn't say there's major hurdles from a regulatory red tape perspective. Just the obligations you have to do. Yeah, from a mandate though, and including partnering even with other parties as an offtake solution for your gas, like you can see how large companies would feel that that's a messy proposition, and I think it creates opportunity for flexible companies like ours, who do have that mandate and that expertise.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
The flexibility that New West has is obviously very attractive in the sense that you have both of the revenue streams and income streams. But if we're looking at like just straight up mining Bitcoin on an oil and gas site, when I first started hearing about this, I interviewed Steve Barber when I was at Bitcoin Magazine back in, I think, 2018. And it was the first time I had heard about it. He was one of the early pioneers in this sector of Bitcoin mining. Fast forward to like 2020, 2021, really 2021, China mining bans going on, all of this hash rates coming to the US. Oil and gas Bitcoin mining seemed like an incredibly attractive thing at the time. I think it was one of the things that a lot of people jumped on early. I had a lot of conversations with people who were thinking about getting into Bitcoin mining and kind of like latching onto that idea because they say, oh, the electricity is basically free, and we're solving a problem. So the oil and gas companies will be begging us to come and suck up their flared gas. And maybe that made more sense when hash price was, it was at like $400 per petahash per day, like at the peak during 2021. Yeah, it was surging, right? And the average for the year was really high. Now we're in a much more compressed hash price environment. Machine efficiency has gotten better, but you would still be better off with an S19J Pro at that hash price versus an S21 currently. This is a long-winded way of introducing the next question. How attractive are the economics actually if you're just doing pure play mining? And maybe you can talk about some of the CapEx costs associated with this too, because that's something we talked about in terms of like the CapEx cost per megawatt for something like this might actually be more than just doing a greenfield, tier one Bitcoin mining data center that's hooked up to the grid,
100%.
right?
No, for sure. Like your generators are the largest CapEx item here for us, like more than data centers and computers. So if you look at off-grid mining in conjunction with oil and gas, essentially flare gas mining in a vacuum, you're looking at basically higher CapEx for sure and lower OpEx, depending on your agreement with the company giving you the gas. But typically that's what you're doing is you're getting gas for a very low price, very, very low price, and you're paying more upfront CapEx for your generator, your data center, and your computers. We're about like 1.5 million per megawatt, and that's part of that is it's Canadian for what it's worth, but that's
still hefty.
And that's really generators, right? Is the big driver there. One piece when you're doing off-grid mining is you can use, or oil and gas mining, is you're employing much less efficient machines, which is it helps on the CapEx side. But yeah, no, that's exactly it. Higher CapEx, significantly lower OpEx. And then as you were thinking about, as you were talking about before, where there was a initial big push in this sort of, partnering with oil and gas companies and then you saw it sort of drop off and kind of less talk about that and maybe the years after the last major bull run here. And I think part of it is one can't underestimate the relative complexity around even just natural gas generation. Like you got to really understand gas composition. You got to really understand generator selection, and you got to understand data centers and ASICs and all that. But I think where some guys I think had some learnings where it was generators aren't all created equal. Gas composition is absolutely not created equal, and so I think last cycle I think there were some learnings there for people for sure. And I think that's another reason why why you haven't seen, or you've seen obviously some companies continue to grow off grid through flare gas mining, but maybe not at the scale as it initially looked like it was going to be in 21.
Is one of the things impacting that scale, as far as I can tell, and correct me if I'm wrong here, but I would just love your perspective on this specifically, not even just economics, but I've heard from other miners that a lot of oil and gas companies kind of got turned off from that push because there were a lot of JVs that kind of soured. Maybe promises were made that couldn't be kept because either the miners were overselling the economics at the time. Again, going back to that 2021 bull market, you had two things coinciding at once. You had Bitcoin's price ripping and you have a hash rate getting cut in half, basically. So mining economics just got absolutely turbocharged, So, maybe there were promises that were made that couldn't be kept because of that. Maybe, there's just, you weren't making good deals with the right people and then people got burned. But all of that to say, do you think that there is kind of, do you think that the oil and gas industry has cold feet now from the operator side about working with Bitcoin miners? Do you think that, I know it's a global industry, we have drill sites all over the world, but in some ways, like any industry, word gets around, right? Another way to ask this question, do you think we've seen a dip in this activity? And do you think that some of that has to do with the fact that maybe the first taste that some of these guys got was a little too sour for them?
I think that's definitely possible. I can speak to Alberta. I've never worked in the US, and so I can only really speak to the Alberta oil and gas sector. And I think there's definitely occasions of that for sure. I think for the most part, just, maybe a bit of naivete on both sides around operational complexity is the other piece that can happen. But I think we were always pretty conservative with our budgeting, but it's hard. There was that period. Yeah, exactly. We had these just really crazy realized revenue for a couple of years there. And I'm sure there was some modeling that happened that, that obviously didn't totally flow through. But I would say there's probably a degree of that. I think there's good operators. I I know there are in the US. There's good there's good operators in Alberta as well that continue to partner with with oil and gas companies. But it's especially in Alberta, it's a relatively small scale based on just the total opportunity set.
Using it's a small scale compared to like maybe a Texas situation.
At least my understanding from when I get to engage with guys in the US, I think there's been higher uptake, and or more development certainly in North Dakota and Texas.
Why do you think that is? I mean, we've maybe already touched on it, but if you could pinpoint a few other things as to why it's growing slower in Alberta.
I think Americans are always quick to innovate, is partly, and I think Albertans are too. I think we're a pro-business jurisdiction, but it takes time, and the U.S. is often just quicker to get on new opportunities and new trends. Honestly, I think it partly is just that. It's coming in Alberta in a really significant way. I mean, we're increasingly material in our operations and increasingly institutional size in our scale in the next 6 to 12 months here. But you're seeing institutions move to Alberta in maybe not directly flare gas mining, but upstream investment, like investment in building power plants in Alberta, buying cheap Alberta natural gas, and growing really meaningfully sized developments in Alberta. I'm sure you're aware of that bit deer announcement, and there'll be others. I think as well. I think sort of long-winded way of saying I think Americans move quick and Canadians follow shortly thereafter, but it's coming in Alberta in a really significant way. And as I said, I couldn't be more confident and happy with the policymaking tailwinds from the way the province has really got behind endorsing this way of consuming an Alberta resource within the province of Alberta.
Going to just the kind of oil and gas industry more broadly, just kind of taking a step out of Canada for a second, wanted to get your take on the NYDIG Caruso proposed buyout. This is something that we covered back in March of this year. And as far as I understand, this acquisition is still pending, going through all of the review and the negotiating and whatnot. But NYDIG, which is a subsidiary, it's kind of the Bitcoin financial arm of a traditional financial company called Stone Ridge, is going to purchase Caruso's 270 megawatt Bitcoin mining portfolio of flared gas mining sites. Now, listeners will probably know Caruso is probably, I would say, the biggest player, or has been the biggest player in oil and gas Bitcoin mining. 270 megawatts is a lot. A lot of these oil and gas sites scattered throughout the US, right, are often sub 1 megawatt or just a little bit over a megawatt. So that's quite a lot. But the thing that really stood out to me in this story is the fact that Stone Ridge has a massive portfolio of natural gas companies and oil and gas companies. So if I were reading this one way, I would think that this is Stone Ridge's way of trying to kind of buy their way into this industry and then to deploy this across their portfolio of oil and gas sites. Curious your takes, if that's kind of a crazy takeaway, or what you think this means for that integration of Bitcoin mining on the institutional level with some of these oil and gas sites.
Yeah, I think, I don't want to speak for NYDIG on their strategy. I like the acquisition for them. I think it makes a lot of sense. I think it's an indication that NYDIG as well as others recognize the value in being as vertically integrated, as far upstream as you can be to the underlying source of energy, which in this case is obviously natural gas. So yeah, I'm excited for them. I think it was cool. So it's we'll see.
One of the cooler proposed acquisitions that I've seen recently, just because of that, of Stone Ridge's natural gas and oil and gas portfolio, and also looking at Caruso's kind of had a really interesting trajectory as well. They say on their website they have 450,000 GPUs deployed at 1.35 gigawatts of data center load. Unclear how much of that is Bitcoin mining. I think it's probably standalone, but they've kind of started rolling out their oil and gas play with traditional data centers as well. I don't know what the compute load is, but they've also struck this deal with Lancium for a 200 megawatt site in Abilene, Texas. It's one of the first sites that is being constructed under the Stargate project, which is President Trump's $500 billion infrastructure initiative, led by investments from Oracle, OpenAI, and SoftBank. I'm curious to hear your thoughts, and maybe we'll close on this one, kind of shift it towards traditional data center operations. When we look at the energy bottleneck that AI is facing, this has been a huge conversation that we've been having on the mining pod. A lot of these Bitcoin miners are pivoting towards HPC and AI business lines. They're maybe even fattening themselves up for acquisition from some of these hyperscalers, or looking to cash in on this by converting old sites like Core Scientific into tier 3 or more data centers for HPC load, or they are greenfielding an HPC or AI data center entirely, or saying they're going to do it, right? None of them have actually pulled that off yet, but all of these conversations are happening and the development is currently ongoing. And the part of the reason why they're doing that is if you look at a chart of the US specifically, its energy producing capacity since 2000, it basically flatlines in 2000. We start taking coal offline. We start booting up more renewables. We stopped building nuclear. And, we filled in a lot of the coal with natural gas. That's why it doesn't just kind of go down. But, we have not really invested in baseload energy. And I mean, I'd be willing to bet that, you probably won't see a big uptick in that for a few decades still when we get some of these new nuclear sites online, like Oklo. And we maybe even go back to rebooting up some coal-fired power plants or building more natural gas. How much do oil and gas sites play a part here? From your understanding, how feasible is it to deploy a small, modular data center for whatever computing load that's not Bitcoin mining? How feasible is that? And do you know how many of these conversations are being had currently, at least in Alberta or otherwise?
Yeah, I know there are definitely conversations being had in Alberta, for sure. In terms of how small that makes sense, I feel very confident speaking to Bitcoin mining. I've been doing that a long time. I kind of know enough to be dangerous in terms of other forms of data centers. My understanding and my quick answer to that would be it's much more or most about connectivity. So as you know, while one of the nice things about Bitcoin mining is you actually really need pretty limited internet connectivity to mine Bitcoin. Makes it a very flexible process and very well suited to remote locations. That's not the case with other forms of data centers. You need good connectivity and continuous connectivity and continuous uptime. And that's, it's not to say that that can't be accomplished on a relatively speaking smaller site. But to me, that feels like the hurdle is you really have to be confident in your connectivity and then be adequately built out where you're staying on all the time. You're an institutional power plant and you're not too small from that standpoint. So I think Alberta is an excellent fit for other forms of data center beyond Bitcoin. I think you're going to see it. But yeah, I'm not. That's the extent of my knowledge.
Yeah, no, that's fair. I kind of put you on the spot with that one. It's because, and I just keep coming back to this conversation about AI and HPC data centers is we kind of lump it all into one basket. And on my reporting all the time, I do AI and HPC, but those can mean literally anything from inference where people are actually using ChatGPT to training a new model to something as simple as cloud storage. And we don't really have, a good look into what all of the different aspects of these data centers, what they will be doing or what the businesses are building them for. I mean, for good reason. They're not going to tell you always who their clients are. And they also don't want to let you know how their business relationships are going or what they're focusing on for BD. But we always lump them into the same basket. And I think that at least from where I'm coming from, it's kind of easy for me to do that because a Bitcoin mine is a Bitcoin mine. But when you start getting into traditional data center work, that compute load could be used for literally anything on the internet. And also the business relationships there have to be built from the ground up. You can't just go to a pool and say, I have Hashrate, take my Hashrate, pay me, or mine blocks directly to the network. So it's a brave new world. And it's been one of the more interesting things coming out of the last year, seeing how many Bitcoin miners are starting to prioritize it. And I think you're seeing it in terms of it's kind of been good for all of the other Bitcoin miners though, right? Because Hashrate's really been stagnating. We've been trading in this like 800 to 900 exahash band for the last few months. Maybe we'll close with that. What are your predictions for when we'll get to a Zeta hash, or what we'll see by the end of the year?
Yeah, I know. Again, it's sort of know enough to be dangerous on it, but I do think at the end of the day, you're competing for rack space, right? Like if you're converting, to the extent that you convert other data centers to other forms of compute, I mean, there's only, there's arguably only so much to go around. So I think I heard you say on another one of your podcasts that you didn't see it through this summer. I think I agree with you. So maybe in Q1 Q1 26, maybe we see it in terms of getting the Zeta hash. But I know we obviously follow it all closely as well, and it is interesting to see how it's just how flat it's been. I don't know if I can think of a period where it's been this flat, like just kind of like in terms of difficulty, just sort of or hash staying within this pretty narrow band. So it'll be interesting. It's a really interesting time in the cycle. I mean, I'm really enjoying it, watching everything unfold here, and it feels like a cool time for us, obviously, to be scaling our operations. So yeah, I mean, that's not a prediction, so apologies.
Yeah, no, it's good. I appreciate it. I mean, I think that I would be surprised if we didn't see a one Zeta hash if we didn't see it before the end of the year. Do you think summer curtailment in Texas, depending on if it's going to be it's usually hot, obviously, in Texas, but if we get another kind of like blistering summer like we've been getting over the last few years, then I think you'll definitely see more curtailment. Last thing, and then we'll sign off. It is when you look at the hash rate chart, and I'm actually just going to pull up hash rate index really quickly, because to me, this is, and maybe I'm a smooth brain and I'm not understanding exactly why this is happening, and never discount that. But what's interesting is if you look at the hash rate chart, like the peaks and troughs are like kind of tracking each other. And I don't really know, like this one right here, right on April 8th, where we hit 924 for the first time and then dipped to 891. Like I could see, or 881, I could see that being, just normal variance with luck and block times. But some of these other ones, man, where it's like 920 down to 820, 929, 27 down to 840. These are huge swings. And I wonder how much of that is like we are kind of starting to see a new normal in hash rate variance, where demand response or other factors in terms of miners just pulling their rigs or going into downtime for whatever reason. It's like really starting to affect the network in ways where we did not, like, it was a kind of a smoother and, like you said earlier, a kind of straight line up. Whereas with this, it's just freaking seesawing all the time. Anyway,
it's super fascinating. I know. I think it's gotta be done. And the factor or essentially the impact of the different ways that people are and companies are mining Bitcoin. I think as the industry continues to evolve, you see its impact in the way Hash Online displays itself. It's like I said, it's cool. So it's fun to be. It's why it's fun to be in a cool emerging industry, right?
Yeah, 100%, man. And every cycle is different than the last, obviously. And this one has been super exciting compared to big headlines last year with the China ban. And now we're seeing the fruits of that in terms of how the US and the North American mining market has, evolved since then. Anyway, not to pontificate too long, Sean, thank you for joining, man. Where can people find you and find out more about New West?
Yeah, absolutely. Just newwestdata.com has a little overview of our operations. I post pretty regularly on LinkedIn as well, so feel free to follow there. And always happy to engage with anybody, and appreciate people who are interested in our journey here as a producer. And thank you for having me. It's been a lot of fun.
Yeah, fun conversation, man. Really appreciate it, and best of luck to y'all. For all of our listeners and viewers, appreciate y'all. Have a beautiful weekend, or beautiful week rather, and then we'll see y'all next week.